害的事情还在发生。
无论你是受害者，或是周遭发生这样的事情，请立刻打113妇幼保护专线。113提供你24小时无所不在的保护。
您现在收看的是华人商业台。
Situation. That is it for tonight's show. Thanks for watching. Hey, Dylan Radigan's Bullseye begins right now. MCI.
CNBC Asia, profit from it.
Why did I come to Dubai?
Well, after Paris, Hong Kong and Bombay, I wanted a completely fresh working environment, a new challenge.
This is a fantastic place to be in luxury goods. It's one of the great international hubs, tax-free and still developing. There is a harmony here. Our staff comprises 17 nationalities who share the same work ethic. At home, we're only 2 nationalities, but equally harmonious. We put a lot of effort into family life. But work is my first priority. Or schoolwork in my kids' case. The choice of international schools means they will get French education, as good as I had. The way Dubai opens up exciting business opportunities? It's a new education for me. Any negatives? No, it's tough work. But I suppose somebody's got to do it.
Why Dubai? In association with Dubai International Airport in Dubai 2003. A vision realized by the winds of change that shape our land, the United Arab Emirates. Seizing opportunity, inspiring confidence, fulfilling ambition. Dubai, crossroads of the new global economy.
Only one show goes behind the headlines, looking deep into stories that drive Asia. The Asian Wall Street Journal.
Hong Kong's economy grew.
With exclusive insights from the editors of Asia's premier business newspaper, we bring you a preview of tomorrow's front page, giving you a jump on the business and political news of the day, plus interviews with business leaders for comprehensive analysis on issues affecting Asia. The Asian Wall Street Journal, weeknights on CNBC Asia.
We've got earnings growth. We're looking at 13% earnings growth. So I think the stocks that got us to this point, the cyclically sensitive sectors, things like consumer discretionary, materials, those are going to continue to lead us higher for at least this first half of the year. Our target in these indexes is approximately 10 to 12% higher than where we are now. So maybe we're a little bit, we're not quite as aggressive on the targets as John, but we're certainly looking for an up market from here.
Name some names, Scott. What should I be buying?
Well, I tell you, some of the names that we like right now, and not surprisingly, they're very economically sensitive. Things like Clear Channel Communications, CCU, things like Norfolk Southern, NSC, and then things like Bed Bath & Beyond, BBBY. So all of those stocks are very sensitive to the economic cycle. Some have moved, the others have lagged, but those are 3 names that we think are going to be outperformers at least through the first half of next year.
I want to show everybody some of your evaluation, John, both on that which is undervalued and that which is overvalued. If you can get these charts in front of you, you'll get a sense of what John's overall view is. First, if we can, the undervalued names. The healthcare sector, you think undervalued. Telecom, the utility names, and finance, all of those in your undervalued category, the 3 of the 4 up there. Yeah. Overvalued, you argue energy, materials, and information technology. What are you using to reach these conclusions?
We do valuations and have for 10 years based on projecting free cash flows of companies and taking present values and subtracting debt, exactly as you would if you were a private equity buyer. These are companies undervalued today that have not responded fully to the dividend tax cut and that have a lot of room to run from the profits the banks and insurance companies are going to make over the next year. One side problem is that the cyclical stuff and the materials companies have had a real run here, and I think we've got a recovery, but I worry that their prices could be getting too expensive.
If you were to look, Scott, at the biggest liability for a buyer, what are you most worried about?
Well, I think you have to look at just the overall market, and as far as that goes, I think you've got a couple of things. Number one is just the outright price of oil. While the dollar weakens here and the rest of the world isn't affected as much, certainly here in the States, that's just an additional, basically a tax. Every time I go to fill my car up, it gives me less money to spend elsewhere. Corporations are seeing higher energy prices with natural gas and oil as well. So that's one problem, and if we crank up to $40 or something like that, that's not going to be good for the economy over a long period of time. The other couple of things that I think could really affect the market are certainly Iraq. We want to see some progress there. Any fallback, any negative news out of there that would appear as though we're not making progress, that's not going to help the market. And of course, tied in with that is as long as President Bush appears as though he's going to be reelected, which right now we would say that is the case, I think we're fine there. But there's going to be a lot of things happening here in this first half of the year, and I think you're going to have a lot of emotional flows based on the re-election, based on Iraq, and then, of course, wondering what oil is going to do. That's what's interesting to me about the Saddam capture last week is 2 weeks ago, you didn't know whether the dividend tax cut was going to be 0 or 40 a month after the next election. Now we almost know what it's going to be. Capital spending decisions have been on hold pending an outcome to this election. As soon as the odds tip strongly enough in the president's favor, you're going to see not only capital spending projects, you're also going to see capital structure changes, raising dividend payout ratios, paying down debt by selling preferred stock and other dividend plays that are really going to give this market a lift that it hasn't had before.
I know that you were an advisor to Reagan on economic policy. How concerned are you about the Bush deficit?
I'm not concerned about it at all. The deficit is a big political red herring. Whenever anyone worries about the deficit to you, what they're really trying to do is pick your pocket. They want to raise tax rates. And right now, tax rates and the deficit are the only campaign issue left to Dean and the other side. No one is ever elected president by promising to raise tax rates.
Scott, do you view the deficit issue as nothing more than a political football?
Well, I think it's totally a political football, and I think it's going to be one of the few issues that the party that is not in control of the White House really has left. And I think really the way I look at it, I try to simplify it, and I look back to the early 80s and the fact that the deficit climbed up to about 6% of GDP. Right now, while it's bigger in absolute terms, I think you have to look at it on a relative basis, and it's far less than that right now. And so I think, we all know what happened from the early 80s. The next 20 years, we had a pretty darn good market. So the deficit doesn't bother me right now.
Scott, thank you very much. John, it's a pleasure. Have a wonderful weekend. Thank you.
Great to see you. Thank you. Thanks, Dylan.
All right, thanks, Scott. Turning our attention to the other news today, top ex-Merrill Lynch trader Daniel Gordon pled guilty to charges of wire fraud, money laundering, and conspiracy to falsify books and records. The former head energy trader admitted to stealing $43 million from Merrill and laundering that money. The charges could carry a possible prison term of 55 years and fines of up to $1.25 million. Now to Scott Wapner, who has a look at the rest of today's headlines. Scott.
All right, Dylan, good evening, and good evening, everyone. We begin with United Airlines this hour. The skies aren't looking so friendly for the troubled carrier right now. United says it's received what's called a civil investigative demand from none other than the Justice Department. The government has now launched an antitrust investigation into its role in the proposed takeover of Atlantic Coast Airlines by Mesa Air, one of United's regional partners. Now, here's how investors reacted to all of this news today. Atlantic Coast down, Mesa Air Group up, and United at $1.50 down 10 cents. And sticking with the takeover theme, software giant Oracle appears to be digging in its heels on plans to buy rival PeopleSoft. Antitrust regulators on both sides of the Atlantic are right now reviewing the proposed merger. Oracle says it's extending the $7.3 billion hostile bid to February the 13th. The deadline was originally December 31st. So far, 12.4 million shareholders have tendered their PeopleSoft shares, and Oracle and PeopleSoft both down on that news today. And finally, to the major stock averages we go. The Dow up 30, the index up 23% so far this year. The NASDAQ finished off 5 for the year. It's up 46%, and the S&P 500 down fractionally. Its year-to-date gain nearly 24%. More news on the half hour. Jill, over to you.
All right, Scott, thank you very much. Coming up on Bullseye, Daimler Chrysler making a big bet, investing $2 billion to overhaul its Jeep lineup. Will it pay off? It may be also time for the recording industry to face the music. This after suffering a legal setback in its battle against illegal music downloads. We'll discuss the music industry's next move. Plus, we'll tell you what the street is saying about download do's and don'ts. Bullseye back on CNBC in 2 minutes.
CNBC Asia. Profit from it.
The foot bone's connected to the knee bone. The knee bone's connected to the hip bone. The hip bone's connected to the rib bone. A rib bone's connected to the chest bone. The chest bone's connected to the shoulder bone. Shoulder bone's connected to the head bone.
Only TNT connects the people who make your supply chain work.
It's easy to connect them bones.
If it seems things are moving too fast, you need news as it breaks to stay ahead. Dow Jones Newswires provides real-time financial news vital for today's businesses.
Huge gains.
You get access to that comprehensive coverage through CNBC's exclusive partnership with Dow Jones Newswires.
The dollar is still rebounding both against the euro
and get the news as it breaks.
The dollar is higher against the major currencies.
For definitive business and markets coverage in real time, Dow Jones and CNBC.
Only on CNBC Asia, the people who influence the world's economy.
Policy is to encourage countries to adopt market-based rates.
The business leaders whose insights help you stay in touch with the business world.
We don't think that hybrid is the only solution.
Opinions you can profit from.
The oil price will be on the high end of historic average.
Some positive signs of a pickup in the residential trading market.
So don't miss out on more of these exclusives. Seen and heard only on CNBC Asia.
Music downloaders are in fact illegal. Hillary Rosen, former chairman of the Recording Industry Association and CNBC contributor, and Wired Magazine's senior editor Rob Levine. Hillary, where does the music industry go from here?
Well, you know, it's a good question, actually. This decision really doesn't change the law of whether it's illegal to upload music and for other people to download. What it really does is say that the record companies and copyright owners have to jump through a bunch of more hurdles to go after them. But I think that they're going to do that. They've already announced today, and as you know, Dylan, I still collect that paycheck from them, so we got to put that out there. They've already said today that they're going to file more lawsuits, that they're going to file blind lawsuits if they have to, what's so-called John Doe lawsuits. They're going to keep at this. I don't think that they can afford to give up.
Well, Rob, if they can't get the names of the people downloading, or if the hurdles are, as Hillary just described, does this shift the power slightly back towards the free sites like Kazaa?
Well, yeah, certainly. I mean, definitely you can file blind lawsuits, but I think that these lawsuits, the way they were done, I don't think they were good publicity for the music labels, but they were certainly, threatening, and, you can't argue that they were successful. The goal was to put a real crimp in downloading, and they certainly did that. But, at the same time, I also think this was a short-term decision. Long-term, you can't sue your customers. Short-term, the record companies wanted to halt downloading, staunch the bleeding, until they got some legal alternatives in place. So I think that they'll continue to do that, but I think that the worst part may be beginning to end.
Well, I think that that's right, but there's it's very clear now that the commitment that the record industry had, Dylan, over the last several months to first send a warning to people before they actually filed a lawsuit is now in jeopardy. Now they won't be able to warn people because they're not going to be able to get their names under this new process until they actually file the lawsuit. And so I think, if anything, the court is sort of forcing the industry to be more adversarial than they probably would like. But there's no question that these lawsuits really are just an effort to keep the playing field as level as possible, because these legitimate services are starting to take off.
Hillary, when are we going to move past this and see a label finally step in and commit to it and say, listen, this is the future of music. We're going to stop printing CDs. We're going to start to release our hits online by whatever legal means are available to us.
Yeah, well, I think that when they stop producing CDs will be quite some years down the road. There are still going to be people who want them. But I think that for the most part, all of the music industry has come to the table and is putting their stuff out online relatively soon after it's released, and sometimes simultaneously. They've got to be doing it simultaneously with their releases. Customers are responding. I mean, you see the numbers that all these online services are showing now, and it's going to make a difference at the music industry's end-of-the-year bottom-line numbers.
Rob, what sort of impact does this have on the iTunes and Walmart?
Well, I think this has been great for iTunes. I mean, iTunes has done pretty well. It's still, one thing that's important to remember is, compared to the total amount of music sold, this is such a tiny amount, but it is growing quickly. But I'll also say that as far as warning people and the music industry being less adversarial, I'm not sure if I would totally agree with that. I mean, people know they're doing something illegal, so they already consider themselves warned. I mean, people know what the consequences are of doing something illegal, so I think that, the music industry may not want to file blind John Doe lawsuits because they'll seem more adversarial, but that's essentially what they're doing anyway.
I'm going to leave it there with both of you. Thank you for your time. Have a great weekend. Rob Levine and Hillary Rosen, our CNBC contributor. Thank you, guys. As we look at Rob Levine's 5 ways to play the downloading of music. Talked to him earlier. He says, do the following. Get yourself an iPod. That's one way to play this thing. Also, he says, bet big on music DVDs. That's the future in the view of one of Wired's senior reporters. Get your music from iTunes. Don't get the SACD, and ditch your MP3. That's a look at 5 ways to play the downloading of music. Is coming up on Bullseye. John Thain has a vast personal fortune that could be a double-edged sword for the new big board CEO. What will he do with his $300 million worth of Goldman Sachs stock? We will discuss it. Plus, good news for Gucci. More people opening their wallets and snapping up pricey leather handbags. Our Bullseye panel weighs in on Gucci and the day's other hot topics when we return in 2 minutes. As millions of Americans hit the roads this holiday season to visit friends and family, they'll be paying their lowest gasoline prices since January of this year. Daimler Chrysler, meanwhile, planning to invest $2 billion to revamp its marquee vehicle, the Jeep. Those stories, Gucci, and regulators cracking down on the don't call list are in the Bullseye Perspective. With us, Herb Greenberg, TheStreet.com columnist, joining us live from San Diego. Bullseye contributors Becky Quick of the Wall Street Journal and Hillary Kramer. And let's start things off with Daimler Chrysler. The issue on this one, an investment in the Jeep by the parent company, Daimler, $2 billion on the line. The perspective on this one, effectively a huge investment on their part, a lot at stake for them, obviously, when they put that much money on the line. Herb, what occurs to you when you see that kind of money put into a line of cars from a company like Daimler?
Well, it's fabulous for the union. Fabulous for the union in Toledo. But I will tell you that when you think about the Wrangler, maybe what they're going to get out of this, because we're just talking about the Wrangler, is if they really get a cool car, if they do something to it, maybe then they get something that can jumpstart sales over there. But there's so much competition right now with so many cool, different cars. That would be my concern. But they've got to do something.
Yeah, they absolutely have to do something. This company now, after that big loss that they reported for the quarter, is saying they may not even end up breaking even for the year. Jeep's a really important brand. They've got to keep it hot and keep it out there, but there's a lot of competition coming in from the SUVs and other guys. So this is something they really need to do. It's a big bet, but a lot of people are saying it's important that they go ahead and make that bet.
Well, I'm thrilled that they're putting the $2 billion in. And Herb, I think that it's very positive, and actually, even with the competition, we're going to see the fact that because it's the patriarch of all the SUVs, that the Jeep can make a comeback, and that's a lot of money to invest.
Yeah, having said that, it's very risky.
Well, the one thing, Hillary, again, this isn't the SUV, and that's the part that I'm sort of watching here. They're doing it with the smaller, cool car, so that's really going to be the twist on the theme here.
Well, they've got a supersized Jeep coming out, too. It's called the Rescue, and that's really going to compete with some of those.
The Rescue.
Go with the Hummer.
Which fits exactly in with the low gas prices if you can buy the big car. That's the news out today. Again, the perspective here at Bullseye, if nothing else, is fill up and go. It's a good time to be on the road and a good time to buy a big car if that's what you want to do. What's with the low gas with oil at record highs, Herb?
Well, right now, I'm sitting here thinking about this story, and all I know is here, where I sit in California, I have come to believe and just accept that I'm paying $1.80 or $1.90 a gallon for the middle grade right there.
Wow.
And what you have is that's what it is, and there's no way around it.
Yeah, but nationwide that's not the case. Nationwide, the AAA is saying it's down about 3 cents in this month versus last month. So.
And how do you have oil at post-war highs and gasoline at one-year lows?
Well, remember
because Baghdad oil supplies haven't been released. That's the big great hope, at least based on everything I've been reading. But now it's only until March.
This is also an example of what the inventory pipeline is all about. There's enough gasoline out there. We really bulked up on it. We had a lot of drivers over the summer, Labor Day weekend, so the extra supply is there. And another 4 weeks or so, unfortunately, we may see gasoline prices to go up at the pump as that oil shortage starts to hit us.
So the answer is there's a lot of supply of gas.
Right. And also, when you come out of the summer, the high was at Labor Day. And when you come out of the summer, you don't have to have it.
Becky, I can't hear Becky. Becky, what do you say?
Well, when you come out of the summer, they release a lot of the reserves that they have to hold on to during the summer. So we're coming off of highest levels that we had set back on Labor Day, too.
Let's move on to Gucci here. Again, the luxury goods sector in general, one that is perceived to be doing better. Gucci certainly evidence of that today. The Bullseye Perspective, a little tongue-in-cheek, but buy a bag is what we went with on this one. The one point of skepticism, I think, is the fact that the person making these comments is an outgoing CEO, and there's question about how credible his optimism is. Becky?
Yeah, absolutely. I mean, you're looking at these 3-month numbers for their fiscal third quarter, and they were very strong numbers, but people are starting to pick through those numbers. They're concerned about how optimistic he was, and they're also saying if you look at the 9 months numbers, it wasn't all that impressive. They actually saw their net profit drop by about 41% just on the first 9 months of the year. The other thing they say is Yves Saint Laurent, which is something that Domenico De Sole was so positive about on the call. They have actually seen their net loss widen over that quarter. So it's something to really keep an eye on, and there is some skepticism coming out of that as people started digging through the numbers.
Yeah, but ultimately, though, style and trends do reign. And what the story is here is that there's only one must-have item, and it's these leather Gucci bags. So I think that's what's helping them in this quarter. And hopefully it'll give them enough push going forward that maybe they'll come out with another big trend.
Herb, you look like a Gucci guy.
Yeah, that's right. You know, I think the real key here with specialty retailers especially is if you look at Gucci, you know, there's the issues about how Gucci's doing it, but I think that specialty retailers that have things people want, like a Coach, even the bigger companies, even a Neiman Marcus, people are willing to pay, I think, actually a little more for less right now. And I don't quite understand it from the perspective of, I still think, other than the folks that have made a lot of money trading some of these momentum stocks, people are still watching their pennies out there.
The last topic on the perspective tonight is don't call. The issue, the FCC coming down and threatening for the first time significant fines against a California mortgage seller. They're saying the warning is on the table now. Each call from here on out, if you call somebody who is registered in the Do Not Call registry, will cost you $11,000 per call. Bullseye perspective on this one, sort of twofold. A, it's about time, and B, go get them kind of thing. I mean, nobody likes these phone calls. Herb, you're in California. Anybody from a mortgage company bringing your phone?
Thank goodness no, because I've got the no-call registry on 3 phones. But I think that this is actually a great trend. I think that the one thing I am getting is I'm getting a ton of now calls from research companies because they're, I think, immune from this whole thing.
Man, go with it all the way. I am so happy to see this happening. I love this. I love the fact that they're going after the spammers now, too. I get so sick of hearing all this stuff. I don't want any more calls. I don't want any more spam. Please go after them.
Will it work?
Probably.
At $11,000 a call, it'll probably work for sure. If that's what the fine will be.
I wonder what they do with the money. That's the. I don't know what the answer to that is, but if they collect it on it, I wonder who gets that money. Anyway, we'll leave it there. Thank you all for your time. It does that. That does wrap up the Bullseye Perspective for the night. Thanks to our guests, Becky and Hillary, back at the end of the show. Herb, have a great weekend. Coming up on Bullseye, what should John Thain, the man set to take over the helm of the New York Stock Exchange, do with all his Goldman Sachs stock? We will discuss that. Very much. Plus, the heat gets turned up on Halliburton. Senator Joe Lieberman is the latest to sound off on the company's Iraqi contracts and alleged overcharging of taxpayers. Bullseye, right back, because it's your money.
CNBC Asia. Profit from it.
GE, voice of the customer.
I became a customer of GE Medical Systems in the year 1990 when we bought a 0.5 Tesla superconducting MRI system from them. We chose GE Medical Systems was because of their cutting-edge medical technology and their commitment to becoming a long-term partner with excellent support services. The major challenge in high-tech medicine today is the rapid rate of obsolescence of medical equipment. GE Medical System works on a modular concept, and using that, you can always upgrade your equipment to the present-day state-of-the-art. With innovative solutions for funding through GE Capital to help entrepreneurs like me, have helped in providing better medical equipment and in creating an overall quality consciousness.
GE, imagination at work.
The Asian Wall Street Journal, the region's premier business news publication, and CNBC, the world's leading business news network, come to an exclusive partnership to bring you the news that matters every business day.
Asian Wall Street Journal newspaper are following the story very closely.
Today's top corporate stories from Asia and around the world. Plus, the latest developments and trends in Asian markets, management, business, and technology. The Asian Wall Street Journal and CNBC. Stay ahead with the business insight that will shape the future.
Every minute, every hour, all day, every trading day. From Europe to the US and across Asia.
Let's get straight to the market.
CNBC has all the latest business news and up-to-the-minute financial information.
Wall Street's a pretty positive start.
To keep you informed and connected to the global and regional economies and businesses. CNBC. Profit from it.
Welcome back to Bullseye. I'm Dylan Radigan. The New York Stock Exchange Chief Executive John Thain owns about $300 million worth of Goldman Sachs stock. And as we told you yesterday on Bullseye, there is a rule in effect at the exchange that says executives are not allowed to hold any shares in broker-dealers. That means the exchange, already trying to revamp its image, has yet another conflict of interest to deal with as they bring in the new boss. In New York, Muriel Siebert, CEO of Muriel Siebert & Company, and the first woman to New York Stock Exchange and the Wall Street Journal's Becky Quick. Muriel, we start with you. What should Thain do with his shares?
I would imagine that has been talked about and discussed and agreed on. I think they're going to have to go into a blind trust, and where he will have nothing, he will be able to do nothing with them, and they will have the right to sell them if they deem it's appropriate.
In the context of the concern about integrity at the exchange, is that sufficient in your mind?
I think he's going to be scrutinized. It's going to have to be fairness. John's a very smart man. He's a good person to learn to lead the exchange because he knows the industry.
Is there any sense, Becky, that the exchange can afford any lenience at this point?
Well, yes and no. I mean, can they afford lenience? No. That's almost a loaded way of looking at it. Absolutely not. They have to be on the up and up. This is very important what they're coming out with in these decisions, and they have critics on all sides. Anybody who sensed any sort of weakness here and anybody who has any complaint is coming out of the woodwork right now to go over it. The first thing people started talking about was that Mr. Thain is an insider, and there's a little bit of concern about that. He is the consummate insider. That's what Jack Bogle said today, the Vanguard founder. I mean, Muriel, what do you think about that? Is that a good thing or a bad thing to have somebody who is such an insider?
Well, I think he's going to have to play very, very honest and very, very straight. And I think he's determined to do that. I would expect it. I do think that he is an insider. They own a piece of they own Spearleads and Kellogg. They own a piece of a couple of electronic trading systems. But he does, I would not like to see a stranger who does not know the industry come in.
I mean, did you have, is this the type of perfect person you had in mind for doing something like this, or what do you feel about his appointment?
If I would have had my perfect choice, I would have said Bill McDonough, but he's spoken for.
Obviously, right. Well, what do you think about the fact that Mr. Thain's in there? I mean, are there pluses and minuses that you're looking at, and are there any minuses at all?
Well, I think that the minus is that he's going to have to bend over backwards to be fair with the way he treats Spearleads and Kellogg, or the way the regulators treat them.
Well, John, thank you very much. Do you feel, Muriel, that the Thain relationship with the specialists will be one that will restore that broken trust between the management of the exchange and the floor?
Well, I think a lot of the investigations are well along. You know, they've been going on for months, and I think that it would be wonderful if they settled it, and what they're going to have to do, which is find these specialists before he really takes office. Otherwise, he may have to excuse himself from that.
Are there other problems at the exchange that you see?
Yes, I think we're looking for a direction. Should the specialists have some black boxes? Should the largest companies be basically an electronic box? I don't favor that, but apparently a lot of people who are knowledgeable do. I like the fact that a specialist is supposed to provide liquidity. I think we made a mistake when we went to trading in pennies before we tested it on some of the large stocks, on some of the very liquid stocks, because a penny does not give a specialist the proper risk-reward ratio. But they cannot allow them to front run. They have to make liquid markets because we need the liquidity in the markets.
Muriel, we appreciate your time. We wish you a wonderful weekend. Thank you.
Thank you.
All right, Muriel Siebert with us as we turn our attention to the other news of the day. Pfizer making a move to halt counterfeit drugs. The world's biggest drug maker telling wholesalers and distributors that they must buy Pfizer drugs through the company or authorized resellers. This move following a similar demand from Johnson & Johnson. Scott Wapner has a look at the rest of today's headlines.
All right, Dylan, we're going to begin our headlines with the latest from Philip Morris or Altria. A federal court in North Carolina has ordered the company's Division to pay more than $75 million in fees and expenses to a group of lawyers who represented tobacco growers in an antitrust case. The attorneys requested $175 million. But Philip Morris had argued the fees should not exceed $27 million. Now, the payment means Big Mo has to cough up more than 3/4 of the total award to the plaintiff's lawyers. The Altria Group today up 45 cents. And effective immediately, travelers will have to fork over more cash to fly American Airlines. The carrier tacking on another $3 to the cost of each one-way ticket to offset rising fuel prices. The new surcharge applies to all travel on American, US, and Canada. The fare hike brings Americans' total fuel surcharge to $13 on every one-way ticket and $26 for each round trip. AMR down on that news today, $12.80. Meanwhile, light sweet crude backed off 9-month highs today, down 73 cents to $33.02 a barrel. And finally, to the major stock averages we go. The Dow up 30, the index up nearly 2.5% for the week, a gain of 23% so far this year. The Nasdaq finished off 5. It edged up 0.1% for the week, up 46% year to date. And the S&P 500 down fractionally, the index gaining 1.33% this week, nearly 24% for